Yes, and hello once again. I'm Max Ratt, and welcome to the Max Ratt Deconstruction Zone. Well, my last show was about the Carnival Triumph cruise, metaphor, if you will, and where I told you that the Carnival Triumph boat was cruise line was really a figurative, subliminal, or hypnotic suggestion about the way to kind of program you to know how to react in a certain way as certain other events unfold for you, and when you watch, in the media where you're watching TV. But this is the blueprint for how you'll be guided into a tyranny and a global financial governance, if you will. Yes, I came right out of the box, starting with that type of stuff, because we're going to be talking tonight about the Ben Bernanke hearings in front of Congress. He started he did a 2-hour session with the Senate Banking Committee. Then he does another 3-hour session with the House of Representatives, House Economic Team, or whatever they call them. I'm just going to start playing you some clips. We're going to discuss, and I think I'm just going to be a 2-part show, because there was more than I wanted to stick all in one show. I'm trying to keep these shows a little bit shorter and a little bit more concise, and so let's just get it going. This is the Bernanke and the hearings in front of Congress, and what I'm going to talk about today is first I'm going to tell you how everything is fine. Then I'm going to tell you, then there seemed to be a very large emphasis on too big to fail, which we're going to go over. I just want to throw out a Bank of America hunch that I have. They're going to talk about they talked about this Italian debt crisis in these hearings with Bernanke, and then they spoke about Basel III agreement, which is an international financial agreement, which is where it seems like that's a total setup for global financial governance. So let's get the show started. I'm going to show you all these clips from basically from the Bernanke hearings, and then I built some stuff around it, obviously. So let's get it going. First, we're going to talk about how the jobs are so good.
Major funding for the PBS.
More jobs, less unemployment.
And I clipped that off of PBS's website, and they were just about to say major funding, and they were going to tell you who funds the show, which is some giant corporation like or a finance group like the Templeton Group or whatever else. I've seen ExxonMobil or whoever else is funding this particular broadcast, but it's certainly not the public. So let me start that over again.
Major funding for the PBS.
More jobs, less unemployment. Those were the headlines from the government's latest report on the economy released this morning. It's been a tough climb for job seekers, but things seem to be looking up last month. Today's Labor Department data showed 236,000 jobs were added in February. January's numbers were revised down, but the figures from December were increased. All told, monthly gains have averaged more than 200,000 jobs since November. In February, the construction sector alone added 48,000 jobs, the most in 6 years, spurred by a housing rebound.
Yeah, so they keep telling you, like, well, we put this amount of jobs and it was spurred and the most in 6 years, but they don't tell you that that's still less, that we're still losing jobs in the economy or something, or you don't count people who aren't looking anymore and people whose unemployment insurance expire or whatever. So there's all kinds of twisted spin and skew on those numbers, but according but PBS is doing their very, very best to try to trick you into believing that that's a good report on jobs, which it's not.
Available information suggests that economic growth has picked up again this year.
Available information suggests. That sounds very affirmative.
Consistent with the moderate pace of economic growth, conditions in the labor market have been improving gradually. Since July,
conditions in the labor market have been improving gradually. There's something. That's encouraging.
Farm payroll employment has increased by 175,000 jobs per month on average, and the unemployment rate has declined 0.3 percentage point to 7.9% over the same period. 0.3 percentage point, 0.30, or 0.30%, I guess. Oh my God. So yeah, and that's a really that sounds like a good number. It's just
White House Chief Economist Alan Kruger.
I think if you look at today's report and some of the other indicators that have been coming in, unemployment insurance claims, the ISM numbers, auto sales, we see a picture of an economy that's continuing to recover.
That's the White House economist. An economy continuing to recover. I'm not sure what that's supposed to mean either. Again, these are very cleverly worded scripts these people have. So now we have Chairman Johnson. He's the chairman of the Senate Banking Committee, and as far as I'm concerned, this guy's got serious. I'm not just kidding around. This guy seems like he's mentally incompetent, intellectually incompetent to even be really a senator, let alone the head of the Senate Banking Committee. But of course, I think that they put somebody here who's obviously challenged enough just to read anything, as you will see shortly. And I've mentioned that in my other Bernanke shows where he was also speaking because he's still the head of the Senate. Well, anyway, so I think they put him in there because these banks are trying to get away with so many crimes and everything. They're going to put a guy who's incompetent in there to be the head of the whole committee. So, of course, they'll never be held to task for what they've done, because then they'll blame it. Oh, well, this guy, look at who's running the committee. He doesn't even know what he's talking about, or he doesn't even know how to read.
Today's hearing is with Chairman Bernanke on the Federal Reserve's monetary policy report to Congress. While progress towards maximum employment has been slow, it has been positive and steady thanks in part to the Fed's thoughtful and well-measured monetary actions.
Yeah, I'm going to play that one more time. This is the chairman of the Senate Banking Committee. Just listen to how this guy reads. He's reading it, first of all, and he can't even read.
Today's hearing is with Chairman Bernanke on the Federal Reserve's monetary policy report to Congress. While progress towards maximum employment has been slow, it has been positive and steady thanks in part to the Fed's thoughtful and well-measured monetary actions.
Yeah, that's Chairman Johnson of the Senate Banking Committee. And this is Milton from that movie Office Space.
Excuse me. Yeah, I believe you have my stapler.
Yeah. My friend said he sounded like that. Here's Johnson again.
Chairman Bernanke, I look forward to hearing your views.
So he's reading and he says views because he thought views was views.
Chairman Bernanke, I look forward to hearing your views.
Chairman of the Banking Committee. Now here's a guy who I thought Johnson sounds like. It sounds like this guy Foster Brooks. He used to play a drunk on the Dean Martin roast. So they were roasting Sammy Davis Jr. on the roast, and here's Foster Brooks roasting Sammy Davis. Sounds just like Chairman Johnson to me.
On behalf of the citizens, the Senate greeting half of the folks of Las Vegas. I'm here to give our thanks to this superstar, Sandy Duncan Jr. Sandy Duncan. Oh. Where would Las Vegas be without you, Sammy?
Yeah. The only problem is that Johnson, I don't think he's drunk. I think he's actually he doesn't know he can't read. He's not functioning properly, and he's the chairman of the Senate Bank Committee. Here we go.
Honestly, every time any Fed chairman has ever come before here, it's like I get a headache before, during, and afterwards. I love you dearly, but trying to pass all these things that everybody's saying is very difficult for average people, including me.
Right, so this Congressman Capuano, he's like Joe Blow, everyday Joe, and he's like, yeah, I don't, and he's trying to make people stand down and feel like they're not inferior to these brilliant bankers like Bernanke. So this guy's gonna like speak for old Joe Blow. Like, we don't understand what you're talking about anyway.
Honestly, every time any Fed chairman has ever come before here, it's like I get a headache before, during, and afterwards. I love you dearly, but trying to pass all these things that everybody's saying is very difficult for average people, including me.
Yeah, well, I guess it is difficult, but I don't want to be too patronizing. But some things are important to your survival, I guess. But maybe some things aren't. Let's just keep it going.
Chairman, I've always known you to be a straight shooter. Have great respect for you. We are on the eve of a very dramatic moment in American history.
Okay, that's a congressman from on the House Banking or Economic Advisory Committee or whatever they call it. And he's saying we're on the eve of a very dramatic moment in American history. I think he was talking about the sequester, frankly, but I think it seems like his script has more meaning than that.
Now, President Obama, we've got a bigger bubble going on during his presidency, and he ain't getting out of Dodge either. Only this time I think the bubble is going to burst not late in his second term, but early. And the difference is going to be there are no more bailouts. This is the last bubble. This is the biggest bubble.
Okay, another guy's predicting that there's going to be a bubble burst or early in Obama's second term. I think that there's something brewing for the next few months, and I think I'm going to try to lay that out as we go, and just keep it going.
You were here in July, and you said that you commended Dodd-Frank for providing a blueprint to get rid of too big to fail. We've now understood this problem for nearly 5 years. So when are we going to get rid of too big to fail?
Well, some of the, as we've been discussing, some of these rules take time to develop. The Orderly Liquidation Authority, I think we made a lot of progress on that. We've got the living wills. I think we're moving in the right direction. If additional steps are needed, then Congress obviously can discuss those, but we do have a plan, and I think it's moving in the right direction.
Okay, so they use this woman, Elizabeth Warren, who's the new young whippersnapper senator, and she's also very likable, and of course the liberal lefties tend to like her very much. Don't worry, folks. It doesn't matter if you're on the right or the left, if you're Mr. Conservative, Mr. Liberal, or you think you're moderate. It's all the same. These people are not what you are like. They tell you that they represent your side. They all represent the same side. Okay, the side of turning you into a goddamn slave and stealing your money and your pension and everything to do with that. Okay, you know, it's a big club. Like George Carlin said, it's a big club and you ain't in it. Okay. Anyway, so she's talking about Elizabeth Warren's talking about the too big to fail and how come we have it, and he kind of dodges around. It's like, well, we're trying. If you want to say, you Congress guys want to say something, fine. So anyway, she's likable. She's talking about too big to fail. So these are things that they're definitely trying to propagandize with us with, and we're going to try to figure out what exactly were they trying to propagate, what are they trying to make us believe. Okay. So Elizabeth Warren, too big to fail. Then Holder comes out. This is like yesterday. He comes out and says something twisted about how we can't prosecute anybody in these too big to fail crimes of 2008 because we're afraid, or some crap like that, which is just pathetic and despicable. So, in other words, they are above the law, according to the Attorney General of the United States.
I am concerned that the size of some of these institutions becomes so large that it does become difficult for us to prosecute them when we are hit with indications that if you do prosecute, if you do bring a criminal charge, it will have a negative impact on the national economy, perhaps even the world economy. And I think that is a function of the fact that some of these institutions have become too large.
Okay, so Holder, the top cop in the country, is going to tell you, "Oh, I'm afraid to prosecute them." That's really disturbing, really, and disturbing that he would have the chutzpah to even say that on TV. No less is even more disturbing.
Too big to fail is not absolute. There are spreads. Their credit default swaps say there is some probability of failure.
Okay, so there's Bernanke in the testimony saying, well, no, too big to fail might, there's credit default swaps spreads are indicating that there's somebody going to fail. Or something can fail, meaning, I don't know what that means either, but that's a hint, to say the least.
Well, Dodd-Frank has a pretty comprehensive strategy for addressing too big to fail. I think it's too early to say. I think we've made some progress, but it's too early to make a definitive conclusion because many of the relevant regulations are not even in effect yet.
Right, and that's something that's going to come up over and over called this Orderly Liquidation Authority, which is part of Dodd-Frank. I also think they're trying to conclude in this Basel III agreement, which is an international agreement, and how they're going to enforce an international agreement will have to be with an international governing body, okay, an international financial governing body, which is what this whole Basel III and all these and what the United Nations and all these criminal banking cabal things are all about is global financial governments. If they can control your money, control your food, control your electric, control your water, they're going to control your ass too, and you're going to be a slave, and there goes your freedom. Well, we're already in a ridiculous police state, so I'm not sure that. I think, well, you'll see what I mean by that. Well, you know what I mean, where I'm going with that. So let's just keep it going. Too big to fail. Regulations are not in effect yet, Bernanke said, which is another. So that's just to muddy the waters and blur the line of, well, because it's gonna go down soon. Okay, this too big to fail. I'm gonna give you my prediction on how I think it's gonna go down in the show. So we'll just keep it going.
So why would they put themselves in a position where by acquiring all these other companies, they're going to get so big...
Oh, almost too big?
Right, too big,
right.
That they don't...
Too big to...
Operate efficiently, and then they...
No, what about the word fail? Is that the word you're looking for? Too big to fail, that's right. TBTF, John. It's the rich man's YOLO.
YOLO, you only live once, and so that's on Jon Stewart's show, and again, they're talking about too big to fail, like making a big joke. That's a big joke. That's how they play all these yuppies. They're like, just make everything so it's funny. Everything's a joke, you know. You lost your job. You don't have any money. Your parents are living in your parents' house. Yeah, it's all funny. It's funny. You only live once. Okay, keep it going. But just, again, they're mentioning too big to fail on Jon Stewart's show.
Am I reading this correctly? Do you believe that, at least through legislative purposes, that too big to fail is just non-existent anymore? Not through the market, but through the law.
We don't have the tools that were used in 2008 are gone now. What we have instead is the Orderly Liquidation Authority, which, among other things, would wipe out all the shareholders of the company being liquidated.
Okay, that's a strange way that he answers the question. I don't know what he says. We have the Orderly Liquidation Authority, but among others, other things. I mean, I don't know why he had to tell you that would wipe out the shareholders, because the shareholders are going to be the depositors in the bank, okay, and the people who have their money in the bank of the or the entity in which which is too big to fail, okay, which is going to be a bank. Let's just let's keep it going.
Now, if we had a systemically large and important firm to fail tomorrow, it still could be very damaging to our economy, and we're working in that direction.
But the law currently, as drafted, after Dodd-Frank and after all the things we've been through, today we do not have the tools that we used to implement too big to fail as it was in 2008.
The tools that the Federal Reserve used are no longer available to us.
I'm glad to hear that.
I'm not even sure what implement too big to fail. I'm not sure what that means either. This is very weird, like they're scripted and they're not trying to make any sense. Then that'll make Capuano's first comment about how average people don't understand this because they're not making any. Then they get into a dialogue about how they don't make any sense. Okay, when they're talking to each other, it doesn't make any sense. You don't implement too big to fail.
And I also agree with you that regardless of what the law says, some people in the marketplace, especially some of my friends on the other side of the aisle, like to believe that it's still in existence. And I accept that not as a legal...
There's a too big to fail law in existence? You see, that doesn't make any sense either.
But as a fact of reality. I mean, some people think that the moon is made of cheese, and that's fine. To them, that's real. So for some people, too big to fail is still there, though there's no scientific or legal proof that it is.
Okay, you see, he's like, some people think the moon is made out of cheese, but there's no scientific or legal scientific proof that too big to fail is there. And what is that? You see, okay, that's why he tells his idiot constituency that that you guys are not going to understand this. Because he's not really making sense, okay, at all. And Bernanke knows that this is all a game that they're playing for idiots who watch this stuff or who are following this stuff, and because they think you're stupid, okay, but what they do get in your head is that too big to fail, too big to fail, too big to fail.
Yes, what I'm asking is that what do you suggest that we...
It's coming again.
We do to address that misconception of the market and the misconception of some of my own colleagues that too big to fail is still here, because I think we all agree that we don't want it to be here. It's not here.
We don't want it to be here, so it's not here. That sounds right. See, that's very, again, more about too big to fail, too big to fail.
Mr. Bernanke, I want to thank you at the outset for your ongoing initiatives to improve the transparency of the Federal Open Market Committee.
Right, there's another guy, so Senator Crapo is thanking him for his transparency. Yeah, okay. Let's keep it going.
Well, on orderly liquidation authority, as you mentioned, the FDIC, which is leading this effort, has been working with European counterparts. They published a paper with the UK authorities, I believe it was a few months ago.
Orderly liquidation authority and the FDIC are partnering or in collaboration with the European authorities, I guess. Again, so this is all over the place. So yeah, so they're planning a global, or at least a European and American banking simultaneous. It's not going to be one bank. It's going to be like, okay, because the last time in 2008 they did one big one, was Lehman. Now they're going to do like four, and they're going to use this orderly liquidation authority. Why would you put that into? Why would you be yapping away about it all the time if you weren't going to use it? Keep it going.
The Fed has been working very closely with the FDIC. Recently, for example, I attended a tabletop exercise where we pretended that there was a bank failing and asked ourselves.
Oh yeah, we did an exercise. We did a drill and we pretended a bank was failing. Oh yeah, that's reassuring.
Tell us what we would do under the laws that the Orderly Liquidation Authority provides. The Financial Stability Board, which is an international body of regulators, and other international bodies like the Basel Committee and so on, have been discussing the issues related to international banks and how they might be liquidated in a crisis.
We're liquidating international banks in a crisis. Okay, let's keep it going. Orderly liquidation authority.
There's a three-part plan under Dodd-Frank. Part number one is to impose costs on large institutions that offset the benefits they get in the funding markets. For example, capital surcharges, activity restrictions, liquidity requirements, living wills, a whole bunch of other things that impose greater cost and force the largest firms to take into account their systemic footprint. That's number one. Number two is the Orderly Liquidation Authority, which we're working closely with the FDIC and with our foreign counterparts to figure out how we would take down a large institution without bringing down the system. And part three is a whole raft of measures to try to strengthen the overall financial system so that it would be more credible that we could take down a large institution without bringing down the system. That's sort of the three-part plan.
Taking down a large institution without taking down the system. Taking down orderly liquidation. That seems to be a very strong thread throughout this whole thing.
It's working to some extent. For example, even though U.S. banks are stronger financially than European banks, frequently U.S. banks have wider credit default swap spreads, indicating a higher probability of actual failure because the differences between the U.S. and Europe in terms of government perceived support. So that's the process, that's the plan.
Okay, so credit default swaps, wider credit default swap spreads with American banks again. That's they're all hinting at, all these are hints at that a big entity is going to go down, as far as I'm concerned.
So getting rid of too big to fail is, I think, an incredibly important objective, and we're working in that direction.
Working that direction, sure are.
And we're still on the suicide watch for BNP, Societe Generale, HSBC, Barclays, Citibank, Wells Fargo, Bank of America. They're all on suicide watch. It's only a matter of days or weeks before another major catastrophe hits.
Okay, so Bank of America, he said BNP Paribas, Societe Generale, there's the other one is Credit Agricole, so let's just keep it going. I
want to get in, I just have a minute on Basel III. Where is Basel III as far as implementation in Europe and the U.S., and just bring us up to date?
Yes, sir.
Because this is a very important, I think, regulatory challenge for everybody.
Right. Well, as you know, we put out a proposed rule on Basel III. We've received lots of comments. We worked through those comments. We've continued to talk to our international partners, and we are
talking to international partners again. Basel III again. That's the international governing or regulatory body. Discussions in Basel, Switzerland. It's all set up.
Planning to have a final rule out on Basel III. I can't give you an exact date, but somewhere in the middle of this year, and with the aim to be beginning the implementation of Basel III during 2013.
We're implementing Basel III this year. Okay, during 2013, which means in the next few months. Okay, we're going to implement Basel III, which is a international agreement. So again, when some big bad financial problems happen, then it's not even going to be in the hands of our own government anymore. They're like, oh, we have an international body bossing us around, which is going to be just like Europe with the Troika, or just like or they're going to appoint a receiver, which will be like look like the guy Papademos in Greece, and the guy and Mario Monti in Italy. These are going to be the that's what this is set up for, is that there's going to be a governing body above the United States government that will both tell us what to do with these financial situations. That's nice, isn't it?
It's the beginning of global governance. It was easier, as I said, because of the crisis. And if something has been understood by the layman during this crisis, is that globalization is no more only a topic for lectures and conferences. That's a reality. We need this.
We need that. We need global governance. Speaking of that, here's another guy.
We need global governance. Global financial governance, and we need it fast.
Chinese Premier Li Keqiang says that the international community should improve and innovate upon global economic governance. He made the statement on Saturday at the second Global Think Tank Summit.
The second Global Think Tank Summit was held in Beijing with the theme of Global Economic Governance, Common Responsibility.
Good morning, ladies and gentlemen, for a real highlight, not just the last plenary session, but a real highlight with some extremely distinguished guests, and a subject that really wraps up a great number of the themes that we've touched on this weekend, because huge hopes have been placed in the G20. It's a sort of perhaps the most concrete achievement of the crisis to date is this idea that we have to make room for the emerging powers, and we also need global governance.
By working together, the European Union and Russia can make a decisive contribution to global governance and regional conflict resolution, to global economic governance in the G8 and in the G20.
There you go. Global governance. Global financial governance, and this is what this is all coming about. This is set up for this type of stuff. Let's keep it going.
I would ask the question, is there any entity in our country that if it failed would create systemic risk, and if so, why is that still the case after the creation of Dodd-Frank? I mean, why haven't we moved more quickly? Why are we taking so long on this journey? And is there an institution that, if it failed, would pose systemic risk to our country? And if so, would you identify it?
The only answer I can give you is that Dodd-Frank is a complicated bill. Many of the rules are not complete.
Yeah, so this guy, Senator Corker, who asked pretty much the same. Well, he asked how come you haven't figured out how come there's still too big to fail. And he says if there is a entity or something that poses a systemic risk, why haven't you identified it? Can't you tell me yet? And he says, Dodd-Frank is complicated, and I don't know if there is any systemic risk. That means there is. And let's play that one again. That's an interesting one. This is he's a Republican, Warren's a Democrat. They're both asking the same questions, more or less.
I would ask the question: is there any entity in our country that, if it failed, would create systemic risk? And if so, why is that still the case after the creation of Dodd-Frank? I mean, why haven't we moved more quickly? Why are we taking so long on this journey? And is there an institution that, if it failed, would pose systemic risk to our country? And if so, would you identify it?
The only answer I can give you is that Dodd-Frank is a complicated bill. Many of the rules are not complete.
Yep, I don't have another answer.
Bank of America secretly was given money in July to stay in business by the Federal Reserve. And I reported it. And Bank of America is in serious trouble. They use it really as a dumping ground. And if any bank's going to go under, that one's going down.
Well, you see, and you're going to see where I'm going with that now. Bank of America. There's somebody that was the legendary Bob Chapman, who passed away last year, but we still said that in 2000. Late 2010, but these things take longer than that to get started, get going, and he didn't make that prediction. No, that was an old prediction, but let's see. Next one.
Well, that's the $1 trillion question about all.
This, by the way, is Matt Taibbi, and he this was only a few months ago. He's talking about Bank of America too.
Well, that's the $1 trillion question about all of these companies, but Bank of America in particular. There is a rationale that one could maybe see for supporting some other companies, some of these other too big to fail companies, because they might be functional, thriving companies with a little bit of help. Bank of America has consistently made bad decisions in addition to all these corruption, all these activities that they've been involved with.
See, Matt Taibbi's kind of covering for the other banks. Like, well, there are some banks out there that have importance, but Bank of America is definitely not one of them. That's how he spins it. But he's trying to badmouth Bank of America, they're trying to propagandize you into believing that Bank of America is a root of all problems.
Without government support, they would have been out of business absolutely in 2008 because of all the problems associated with Countrywide. They've needed massive government support ever since. Just last year, they were in a very delicate situation where a number of their counterparties and creditors were concerned about the massive flow of derivatives that were on Merrill Lynch's books. They convinced Bank of America to move that stuff onto its own depository side so it would be federally insured. So now we're all on the hook for all this stuff.
Right, so, and like how he knows that and how that is impossible is ridiculous too, but, so he's saying that, you know, they have all kinds of derivative exposure, and they put it all into their depositor side, so the FDIC is supposedly insuring that, and that's why they'll tell you that, you know, that they're too big to fail and this and that. This is all set up. Am I taking the bait? It's possible, but let me just keep going and show you what other evidence there is.
Bank of America has reached a settlement with Fannie Mae to resolve claims related to residential mortgage loans.
$10.3 billion is what Bank of America owes Fannie Mae, roughly $7 billion in loans it will buy back.
So it's going to pay $3.6 billion to Fannie Mae. It's going to buy back about $6.7 billion in loans that it and its countrywide banking unit sold to Fannie Mae.
Yeah, and these numbers are usually in the trillions, so when they say $3 billion or $2 billion, that's just to tip you off that there's problems. Believe me, it's in the numbers that their exposure to or their fraudulent losses are in the trillions, not billions.
So this is the Flagstar case, and it was sued by what's called a monoline insurer. So Flagstar was a big mortgage lender, and it lent among the riskiest kinds of mortgages. And
yeah, and a monoline insurer or insurance is a monoline is a bond insurance, which is basically just a credit default swap. Okay, that's basically what they're telling you that is. This guy is Bill Block. You see, he's very believable, and he seems to know a lot, but he's always spinning different things too. But let's go back. Let's just play that again and we'll see what he said monoline insurer, which is basically a credit default. That's another way of saying credit default swap.
So this is the Flagstar case, and it was sued by what's called a monoline insurer. So Flagstar was a big mortgage lender, and it lent among the riskiest kinds of mortgages and was a major user of liar's loans. These are the pervasively fraudulent loans that I've talked about many times. And assured, when we say a monoline insurer, that just means it is a specialized insurance company that specialized.
They're credit default swaps. Okay, that's what they mean.
In guaranteeing the quality of these kinds of loans once they were packaged to back this kind of bond.
In guaranteeing the quality of a loan, that's just guaranteeing the loan. Guarantee the quality of a loan.
So in itself, this case isn't all that important, but it turns out that this is the same methodology being used in an enormously bigger case against the Bank of America. And Assured just got a huge win against Flagstar, where Judge Rakoff has ruled that the lender basically lied repeatedly in 1 year 75% of the time to the people that were insuring the quality of their loans.
Lied 75% of the time to the people who insure the quality of their loans. You see, this guy is just trying it's a nonsensical explanation about but what he's trying to say is that Bank of America has huge exposure to the mortgage-backed security market and the credit default swaps guaranteeing those mortgage-backed securities.
So that's a big deal because under that same methodology, Bank of America could face actually tens of billions of dollars of liability from other parties. And, of course, that could be a massive effect on Bank of America.
There you go. And as we keep it going.
But we will certainly, of course, meet the international agreement, and then we will be looking to see whether additional steps or U.S. customization is necessary.
Okay, so he's promising to meet the international agreement, Bernanke, again, which is the Basel III agreement.
They wanted to say, let's take a specific case of a specific actor and let's show people what these companies are really all about. And there was some discussion over what company they should pick.
Okay, so this is Matt Taibbi, and he's talking about the Occupy Wall Street protesters. He said, they were having problems picking an issue that they wanted to all rally behind, and they said, let's Occupy Bank of America protest, and so they chose specifically Bank of America to protest against, and they went to South Carolina where their offices are, and they protested against Bank of America. So. Again, this is all media propaganda and setup for you to accept the decline and the orderly liquidation of Bank of America. That's where I think it's going. That's my take on it.
They wanted to say, let's take a specific case of a specific actor and let's show people what these companies are really all about. And there was some discussion over what company they should pick. And the almost universal consensus of all the experts that they talked to was, you should go for Bank of America because they're involved in everything. Whether it's ripping off student loans to the unemployed to pensioners to depositors. Bank of America got caught systematically overcharging its depositors by $4 billion. So they organized a series of protests, and there's a campaign afoot to try to get people to move their money out of Bank of America. And this is going to be something that I think they're going to focus on, from what I understand, for the immediate future.
Okay, so more focus on Bank of America.
Next question's on Italy. So the markets reacted quite nervously, shall we say, to the elections in Italy and the idea that they might not be able to form a government or might form a government that would be less willing to go along with the present economic policies. My question is, A, what do you think of that? But B, more importantly, what is the exposure of our American financial institutions to Italy's debt? How dangerous, let's take the worst case scenario, and let's say they can't form a government and they go through a little bit of what Greece or Spain has.
Go through a little bit of what Greece or Spain has, like it's some sort of a flu or something like that. That's Chucky Schumer from the New York senator, and he's asking, what's our exposure to the Italian debt crisis? Because the Italian debt crisis that's going to blow first, and that's how they're going to. So now that's how I'm going to tie in Bank of America once again. You see, the Italians have some over $2 trillion in bond debt that they've stuck to the Italian sheeple. That's why they're trying to put them through austerity. The Italian people aren't going for it. They're going to end up defaulting on their on those sovereign bonds. Who holds those bonds? French banks like Crédit Agricole, BNP Paribas, or so they say, are the big holders of those Italian bonds. Also, there's a German bank called Commerzbank, and I'm sure there's a couple of UK banks, Barclays, and such. But the way that the American media and the Congress and the Bernanke will spin is like, do they have any direct exposure to the Italian banks? And he's going to say no, not direct, but that's because it's indirect, if you will.
Doing? No, get off. Get off. See, you gotta make my bunk. See, we're in Italy. The guy in the top bunk has gotta make the guy in the bottom bunk, he's gotta make his bed all the time. See, it's in the regulations. See, if we were in Germany, I would have to make yours. But we're in Italy, so you gotta make mine. It's regulations.
It's regulations, and the Italian debt.
There are, of course, also money market funds that lend a lot of funds to European banks, including Italian banks. And those are connected. The fate of those institutions is connected to the fate of the fiscal situation.
The fate of fiscal, right. So the Italian banks are connected to the fate of the fiscal situation. And he's saying that money market funds, which is what your bank account usually is your savings account, have exposure to Italian banks. Get it? That's where I'm going with this. Okay, and then let's Jim.
We're not reporting anything regarding the sacredness of segregated accounts. We are getting into a middle stage of implosion where I believe the public will not wake up until at least 1 million private accounts are stolen and vanish.
There you go. Jim Willie said that he believes that there's no they're not paying attention to the sanctity of segregated accounts. Segregated accounts is like your bank account too. Money market funds that have exposure to Italian banks, according to Bernanke.
And again, they're thriving in the darkness of non-accountability and non-transparency.
Non-accountability, non-transparency. So Willie says the media is not reporting on it.
Is it better or worse than estimated?
It is worse than had been estimated. In fact, it's a 30% bigger loss than it was this time last year. And
that's just about these people talking about just a finance show talking about Crédit Agricole, which is a French bank, which supposedly has a large exposure to this Italian debt. They hold those bonds themselves. What you're also going to learn, what I'm going to tell you is that so the French banks hold those bonds. Well, let me just play this Crédit Agricole one quick.
We're almost at 4 billion euros.
Is it better or worse than estimated?
It is worse than had been estimated. In fact, it's a 30% bigger loss than it was this time last year, and we're almost at 4 billion euros overall. Once again, as we've seen across the sector, it's goodwill write-down. So, of course, this is not something that affects cash or indeed capital, but it does affect profit, and it does show that many companies overpaid for acquisitions. So 2.7 billion euro goodwill write-down, all because of course, you've got rising regulation, economic slowdown. Most of this seems to have fallen upon its Italian branch network. 850 million euros write-down on its Italy branch.
Almost a billion euros on their Italy branch of Crédit Agricole. I'm sure it's way worse than that. Again, most of these things are in the tens of billions, if not trillions. Well, I don't think it's, it literally supposedly only has 2 trillion in, 2.6 trillion maybe in outstanding, or bad debt, sovereign debt. So, Crédit Agricole's probably got at least tens of billions in debt exposure to that.
And the French guy says, deodorant? What's that?
That was from a Family Guy. But so the French banks have that exposure, the direct exposure, quote unquote. But the problem is that that Bank of America is also tied in with that because they were writing the credit default swaps or insuring, or that monoline insurance, as Bill Black said it earlier. That's the credit default swap or the bond insurance that B of A has, or Bank of America has exposure to, and he said it could be in the tens of billions, and I'm telling you it's more than that. Okay, so that's so they're all I think they're setting it up to take down Bank of America in a orderly, and that's where that boat thing came from, or the ship cruise line thing came from last week or a couple weeks ago, where they were they were going to give the passengers on the ship that the engine burned out of $500 and a long trip home. Okay, so again, that's the tie-in to Bank of America going down. Once your bank will go out of business and you'll get $500 in an orderly liquidation. But as you heard Bernanke say earlier, also, but if you're a shareholder, meaning if you got your money in that bank, not just shareholders. If they're gonna that's gonna be reinterpreted as if you're a depositor, you're gonna lose your deposit. Then they're gonna orderly liquidate and give you pennies on your dollars back. That's how that's gonna work. So so the French banks have the direct exposure, and Bank of America is insuring or monoline insuring those bonds, which is more or less a credit default swap. Now they're going to call it monoline insurance.
And the French guy says, deodorant? What's that?
Okay, and here's another explanation from Paul Craig Roberts.
The so-called sovereign debt crisis
is being used in two ways. It's not actually being solved. It's being used in one way to increase the power of the European Union over the member countries. It's being used essentially to destroy the financial and eventually the political sovereignty of the individual member states. It's also being used to establish the principle that the banks, the powerful banks, are not responsible for their own losses from bad investments in sovereign debt, but that the poor members of the indebted countries are responsible for the bank's bad decisions and therefore have to protect the banks from losses by giving up pensions, medical care, education, the social safety net, accepting lower wages. In other words, the cost of the bank's mistakes are being imposed on the peasants.
There you go, and that means, and they'll just, they're gonna say, sorry, you have to give up your pension or your Medicaid or whatever else you have because you owe us you owe us $3 trillion, and we bought bad bonds, but you know what, those bonds were rated AAA, and they weren't, and that's because. And the people certainly didn't gain a thing out of these things except for more austerity and more misery. But they're going to stick it to the people. That's how it works.
Of course, in the United States, we don't call them peasants. We call them consumers.
There you go. Let's play that one again.
Of course, in the United States, we don't call them peasants. We call them consumers.
Right, we don't call them peasants here.
Now, across Europe, there's this feeling of discontent, but also a sense of unfairness. There's a feeling that the middle and lower classes are shouldering the burden of the financial crisis, which has been dragging on for a couple of years now, while the small percentage that owns much of the wealth here in Europe are not feeling the pain of the austerity measures.
Yeah, so there's a rich few that aren't feeling it, which is just like New York right now, right here. There's a rich few who go around partying, but the 99.9% majority, whether you're even in the higher end or the lower end, you're feeling it. Okay, their business is bad. Okay, all over, and whether you're in the real estate business or you're and let's face it, a lot of people in the real estate business were used to making good money, and it's all a mess right now, and I think that they're going to set up this. They're going to say that they're going to say they're going to start it off with this Italian. You're going to start showing you all the Italian people emotionally distressed from this banking, from this sovereign debt crisis there. Then they're going to tie Bank of America into it, along with their mortgage backed security fraudulence, and then they're going to implement this new orderly liquidation authority. I think that's what's to come, and maybe I'd say all over throughout the next 6 months to a year, it's going to all go down like that. Just like Bernanke said, they're all, and then the other guy said we're on the eve of a very big event, and Peter Schiff said that he thinks it's going to happen in the early part of Obama's term, and then Bernanke said that we're going to implement Basel III this year, which is a regulatory thing, international regulatory thing, and then so now just before we wrap this show up, I'm going to play a few more clips of those same clips about global governance, global financial governance, but one more thing was that so this guy Bill Black again, who's very highly regarded in the media, in the alternative media, even though he's a spinster for sure. He will talk about Jack Lew, who was a new appointment to the Treasury from who is of course from Citibank. So they just appointed another Wall Street guy but he's going to make it sound like Jack Lew's very incompetent. Okay, and that's going to be another. They're going to be like, oh, well, Obama put in an incompetent guy. That's why your journey home after they robbed your bank account is going to be a long one, because even the United States Treasury is going to act like, well, we're incompetent too.
So he produces disaster, profits from the disaster, we pay him bonuses for causing the disaster, and then we have the absurdity of the President of the United States saying that this is a man with a track record of unmitigated success. It is exactly the opposite in terms of finance. He is a worthy successor to Tim Geithner in that he has screwed up everything substantively he has ever touched.
Yeah, so just get ready for the same criminality right through. The Jacob Lew, or Jack Lew, is the new Treasury Secretary, and he's going to he's just as incompetent as Geithner. Like, so they're going to that'll take away any responsibility he has for anything, he's incompetent. So don't expect anything out of him. And so this is all, and as this all comes together, we're going to go with it's global governance, folks.
By working together, the European Union and Russia can make a decisive contribution to global governance and regional conflict resolution, to global economic governance in the G8 and in the G20.
We need global governance, global financial governance, and we need it fast.
Chinese Premier Li Keqiang says that the international community should improve and innovate upon global economic governance. He made the statement on Saturday at the second Global Think Tank Summit.
The second Global Think Tank Summit was held in Beijing with the theme of Global Economic Governance, Common Responsibility.
Yeah, they're going to end up screwing the Chinese over on that, but they're pretending that the Chinese are in with global governance too. Everybody's in on it, except for you, me, everybody's in on it, for sure.
Good morning, ladies and gentlemen, for a real highlight, not just the last plenary session, but a real highlight with some extremely distinguished guests, and a subject that really wraps up a great number of the themes that we've touched on this weekend, because huge hopes have been placed in the G20. It's sort of perhaps the most concrete achievement of the crisis to date is this idea that we have to make room for the emerging powers, and we also need global governance because we are interconnected in ways we had not previously realized, and these two things have clearly come together in the tremendous ambitions people have for this forum, for the G20.
Yeah, so that's like a G20 meeting, and the guy's like, yeah, we need global governance. We didn't realize how interconnected we were. And then finally, and that's going to be the end of this show, the Max Ratt Deconstruction Zone. Thanks for coming aboard again. I'm Max Ratt, and this is the part one of my deconstructing Ben Bernanke shows for this half year. And this one I was trying to discuss how they're emphasizing so much. They're talking too big to fail, too big to fail. Then Bank of America seems to be the big one that's going to fail. And they're going to tie it into the Italian debt crisis, try to make it an international thing. Maybe they're going to try to have a couple of French banks fail and Italian banks fail along with Bank of America so they can use this orderly liquidation authority, and then they're going to tie that into some sort of Basel III international liquidation authority. And that's going to be and then we'll be there. We'll all be slaves to the fucking international banking cabal, and they'll go along with their eugenics program. Isn't that nice? That's what you can expect out of all this, folks.
I think that right now the question is, do we all work for central bankers? That's what I want to address to our guest tonight. Is this global governance at last? Is it one world, the central bankers in charge?
I don't know, is it? Time will tell. Thanks for coming aboard the Max Ratt Deconstruction Zone. I'm Max Ratt, and that's a show. Come back soon, and I'm gonna next day or so I'll do the next show about the Bernanke hearings. We're gonna talk about mortgages and a couple of other things related to the domestic economy and mainly you can wait and see next show. Thanks for coming aboard the Max Ratt Deconstruction Zone. I'm Max Ratt, over and out.